very warm welcome to each one of you. I hope in this current pandemic situation, you yourself and members are doing well. Kindly stay safe because it seems COVID is battling in some form. I would like to give you a quick company overview and then we'll talk about further details. Talking about PCBL, as possibly most of you know, that we are the 7th largest in terms of sales in the world, and of course in India we are the largest. In terms of vision, we want to be a trusted global organization providing high-end solutions to our customers and also create exciting workplace for our people who work for this organization. So that's the vision of the organization. In terms of capacity, we have currently a production capacity of 603 KT, 6,03,000 tons per annum. We do produce green power as part of our operation, and current capacity of that green power is 84 megawatt, which also includes the recently commissioned 8 megawatt power plant in Mundra. Manufacturing facilities, we have got 4 at this point of time. One in Durgapur in West Bengal, one in Kochi in Kerala, and 2 in Gujarat, one in Palej and one in Mundra. Typically, for carbon black, which is part of chemical industry, the spread is like 70% odd for tires, and then balance close to 30% is between performance chemicals and specialty chemicals application. And carbon black is part of chemical industry, so we define it as a chemical product. In terms of applications, 70% goes into tire, as I mentioned. It plays the role of reinforcement material as well as bonding agent in tire. In performance chemical, it is for classical usage. In industrial applications, in molded profiles, in injection molding and agricultural pipes and cells, etc. When it comes to specialty chemical, which is the highest end of the product category, it has got 3-4 different and distinct areas. Plastic, one segment, paint, ink and coating, conductive, and superconductive. These are different categories and segments in specialty chemicals. From our perspective, in terms of number of grades of the product, we have currently more than 75 different kinds of grades. Out of that, approximately about 45 are for specialty chemical applications. And out of these 45, in last 3 to 4 years, we have developed 30. Since as an organization, currently we have roughly about between 60 to 65% in terms of sales, it goes to tires, and balance 35% covers performance chemical as well as specialty chemicals. And since specialty chemical is a subject, is an area where it requires a lot of research and development focus, we came out with our first R&D center near Baroda about 4 years back, and followed it up with another R&D center in Europe, in Belgium, about a couple of years back. And between these 2 R&D centers and the technical sales, we have more than 40 scientists and engineers working. And that's how we could manage to develop more than 30 grades of specialty during last 3 to 4 years' time. Coming back to the point, we roughly sell about 60 to 65% to tire and balance roughly 35% between performance chemicals and R&D. And in R&D, we have divided that focus into 4 verticals. There are 4 verticals in R&D. One vertical focuses on new product development. There's a team working around that. The second vertical focuses on oil engineering. When I say oil, it is basically the raw material I'm talking about. Raw material is almost 70% of our revenue, and therefore it is extremely critical and important for us. And also for specialty different applications, we use different kinds of oil. So we need to do a lot of analysis and research in the area of oil. And therefore, one article is absolutely dedicated on oil engineering. There is a third dedicated article which works on post-production of this black, which is characterization and functionalization of those products to get certain kind of properties, certain kind of applications it can be used for. And that vertical is called characterization and functionalization. And there is a fourth vertical which actually focuses on fundamental research, where it can be something like a high-tech filler we are trying to develop, or we are looking at methodology to produce carbon black. And this has got, of course, little long gestation period. Typically, it is about 5 years' time where you start getting the results. It's a long-drawn journey. Here we have collaborated with a lot of universities from across the world. Also, government has been supporting us, sponsoring some of the critical projects of ours. We have also tied up with some of the other industries which are related to ours or in a part of this initiative where they can also play a role. Coming to current global situation and what we are talking through and how it is impacting our business. As we are coming out of COVID, definitely the situation has improved with respect to last year when things were really bad and we had to go through major lockdown, shutting down facilities, etc. Having said that, we are still not completely out of those with COVID being around different pockets within India as well as outside India. So to manage the show, we need to be agile to ensure that we are able to utilize our full capacity without any problem. And that is the primary motto at this point in time, the full capacity. All plants are running at full at this point of time. Generally, the growth on the tire industry is looking all right, other than this damping from time to time because of COVID. On the specialty side, also the growth is coming back after the COVID, and things are definitely looking up. So we are quite confident that going forward, things will be looking all right. Having some temporary challenges here and there. One critical area of which we must have noticed that crude oil prices have gone up substantially, which is our mother raw material, because the raw material what we use at fish shop is a derivative of crude. So it has gone up to the level of $50 at this point of time, dollar per barrel. Only worry is that if it goes beyond the point from here on, then it can start impacting different economies across the world. So that will be a definitely concern area for us. Other than that, we are looking at a positive scenario going forward, both from tire side as well as specialty and performance chemical side. On the capacity side, as I mentioned, that we are currently at 603,000 metric ton or 603,000 metric ton per annum capacity. And out of this, recently we added about 32,000 tons of specialty a few months back in Palej. In February 21, it was commissioned. The other new projects which are going on, there are a few PPP, which is power plants, which we are putting up in different places. Recently, we put up 1 megawatt, which has already happened. One more 7 megawatt Palej is coming up, and one more 7 megawatt coming up in Kochi plant. So it is 98 megawatt of power, and we are hoping that this will be done within this financial year. All these three things will be completed. One is already completed, and the 7 megawatt in Palej and 7 megawatt in Kochi, both will be over within this financial year, taking the total power to 98 megawatt. Greenfield activities in Chennai has already started. We have already obtained all necessary permissions, government approval, and long lead time equipment have already been ordered. All orders are in place. And in addition to that, the civil activities have started. On the ground, civil activities also have started now. We are targeting to finish up this process by end of next calendar year. And as we feel that it will be on time without any problem, we are quite confident the entire project is also in place. This plant will be adding 147,000 metric ton of capacity per annum basis, and also 24 megawatt of power. So the power will go up from 98 to 122 megawatt. In addition to this, we are also in a way planning to add further capacity in specialty in Mundra, which means it will be a brownfield expansion because Mundra we already have a large plant. We'll be adding 2 more lines in Mundra in specialty. Out of these 2, we have already finalized the plan for 1 line. The other line, exact design and the product mix, etc., we are finalizing at this point of time. I have a feeling roughly between these 2 lines will be producing about 40,000 tons, which means specialty will be going up from current 72,000 gross capacity to about 122,000 gross capacity. On the financial side, as an organization, we are already a debt-free company. On the credit rating side, on the long-term back facilities, we are AA, and in short term, we are A1+. And as we look at the numbers, we feel the future major capacities we should be able to manage within based on our internal assets, and after maintaining that healthy dividend payout ratio of what we have been doing in recent times. Additionally, we have been also focusing as an organization on ESG and sustainability initiatives. We started our journey on ESG about 3-4 years back, and in the year 2018, we first time came out with the sustainability report. But I will say that we just took a few baby steps and we started moving further. And very recently, about a couple of months back, we came out with the second sustainability report, which is as per the GRI standard and also reviewed and audited by TUV. We have taken in that sustainability report, you can see it on the site, we posted there. We have taken 12 material topics covering E, S, and G, all 3: environment, societal, and governance. Having said that, obviously as a manufacturing company, our focus is little more in the area of E, which is environment, and it is important as well for the organization to focus is little more in case of E. And weightage-wise it is more. I'll say focus is equal, but weightage-wise it is little more in case of E. And then we are also focusing adequately in the area of S and in the area of G. So this is in short, this is how things are looking. Going forward, we feel looking at next few quarters, we feel the demand is distant and it will be going up from here. The global situation is also favorable. One of the reasons possibly China is having a lot of issues also in terms of their production of many items, including our product, carbon, and therefore the market, even global market, we are going to play a very, very strong role. As such, based on the economics, it is looking very decent. China will only be an additional factor, additional bonus factor, I will say, for us. So this is how it looks like from business point of view. I would like to leave it now for question and answer to get into further depth or the details as you wish in whichever area you want to perform. Leave it to the floor now.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vikram Ramalingam from Maybank Kim Engineer. Please go ahead.
Yeah, hi. Thank you so much, sir. My first question is on since more than two-thirds of our volume is in the tire industry, which automatically means the auto industry, this whole new drive or thrust has been on the EV part now. Even the governments, even most auto companies are going in that direction. So in this particular aspect, what kind of a role do we have to play as a carbon black company?
Well, there are two aspects to this when we talk about EV. While EV electrical vehicles also will use tires, and possibly the weight of those tires will be more because the general cross weight of the vehicle will be going up because of the heaviness of the battery. So therefore, the raw material requirement for tires as such will go up. So from the point of view, when you look at the tire segment and carbon black, therefore, the consumption is likely to go up. Okay, so that is one part of the story. But
just a clarification. So are you saying that content of carbon black in a tire will go up as a percentage? Is that what you're trying to tell me?
No, not as a percentage, but since the total consumption of raw material will go up with heavier tires, that is the absolute volume of carbon will go up. Not percentage. Okay, that is one point. But I think the bigger point, and I think more exciting opportunity somewhere else, EV will be using battery, obviously, right? And these batteries do use high-end carbon black, which I just talked about. That is specialty. One segment is there, which is conductive and superconductive, and that is the black which is being used in this EV. So that is an exciting opportunity for us going forward. And then all this effort what we are putting in research today, keeping this kind of opportunities which are likely to come up in future, keeping in mind this kind of opportunities.
Okay, thank you. My second question is on your exports. This year I've been tracking your results, and the thrust on exports or the contribution of exports has been increasing. So how do you see that going, and which are your key markets, and how are they developing, and how are you managing foreign competitors? I mean, more clarification on your export side of the business would be helpful.
Sure. I think there is a philosophical change which has happened in the organization over a period of time. In earlier days, export was more of surplus management. That you first set in India, the national market, and then whatever is extra quantity available, you go come and sell in the market, whichever market is available at that point of time. So typically there is a clear strategy for the international market. So we have changed that philosophy completely. What we say now is the entire globe is our market. Within that, of course, India is an important market for us. Therefore, the strategy which is applicable to India to manage our customers, the focus on customers, product-wise, service-wise, exactly similar focus is there today, even on international customers. Okay, so in the process what happened over a period of last few years, we have set up, we have put right kind of resources, we have set up right kind of supply chain in different countries across the globe. Just to give an example, since we don't have a plant, for example, in Europe, but in Europe we have our own, not really own, but we have tied up for our decanting station and warehousing system. And it is acting like a virtual plant. A customer next door is always feeling that my material is available next door. He gives a feeling of virtual plant. So things like this we have done over a period of last few years. We have put up supply chain partners, we have tied up with supply chain partners, we have put up kind of fusion everywhere. We have our own people in different countries today. For example, today we have our own people, own employees in Japan, in Korea, in Vietnam, in China, Korea, in Europe, in Germany, within Europe, in Germany, and of course we have our Belgium R&D center, and now we are looking at USA to increase our because of. So going forward, you will see more and more that we are becoming more global oriented. Our footprint is going to go up further going forward, and by virtue of the focus in the area of efficiency, by virtue of having product portfolio, wide range of product portfolio, and going up the value chain continuously on the product side, we are also competitive our market and remain competitive in the market. So it's a combination of both, setting up the right kind of structure, people, and product portfolio and strategy. It's a combination of all of these. And definitely international market will be enough Australian cost.
Just a follow-up to this, sir, isn't it true like for a tire company it takes usually 2 to 3 years to approve carbon black from a particular company? So how are you managing that then?
Okay. When it comes to tire companies, today we are globally all tire companies we talk about, all of them are our customers. In India, all the big names we talk about, they're all our customers. We talk about the global ones, whether it is Bridgestone or Goodyear, all of them are customers. So we are not in that situation where tire companies will take any more time to approve any of our new grades because many of our grades are already running with them at this point in time with the supply to them. So when you come out with a new grade, only it is in collaboration with one of the tire companies based on their specific requirements, and then we collaborate, work very closely between their technical team and our research and development team. They work very closely and come up with the product. And therefore, the time for approval is, typically short with tire companies particularly because all regular supply to them. So they are our regular customers. So it doesn't take much time really. I will say maximum of 6 months normally, not more than that.
Okay. Sir, my final question. Are you looking at Are you looking at any inorganic opportunities, especially in international markets, instead of setting up new plants, which typically takes 3 to 4 years with all sorts of approvals? Are you keen on that strategy?
Honestly, the Chennai project is right now on, and our feeling is that this is not sufficient. We need to add further capacity as soon as possible. So we have already started looking beyond Chennai and beyond Mundra expansion for specialty. And we are absolutely open, whether it is inorganic or organic, we are open for both. And if there is right kind of opportunity at any point of time which comes on our way, we'll definitely act on this. If it is a logic.
Okay, that's it for now from my side, sir. Thank you.
Thank you. Thank you.
Thank you. The next question is from the line of Bhavesh Chauhan from IDBI Capital. Please go ahead.
Hello, sir. Congratulations on a good set of numbers. Sir, my question is on specialty volumes. So now we have a capacity in excess of nearly 2 times than what we are running at current run rate. So, sir, what is our outlook guidance and outlook guidance on specialty volumes in next 2 years? Also, do we have a very strong order backlog for specialty now?
Okay. First, technically, you were saying that against our current transit, the capacity is almost double. Let me clarify here one. The capacity which we now refer to the gross capacity, right, which is current 72,000. Now, depending on the mix, it does vary in reality. The actual production against this 72,000 possibly will be, depending on the mix, possibly will be in the bracket of 55,000 to 60,000. Okay? So current transit, if you're talking about, I don't know what number you're looking at, 8,000 odd, I think, for last quarter, which means 32,000, 34,000 kind of number you're looking at. So we're talking about 34,000 to going up to maybe max 60,000, not more than that, with the current capacity. Number one. Number two, also this capacity of 32,000 capacity came just a few months back, in the month of February of this year. And typically, taking a look on the earlier question, while tire companies doesn't take much time for approval, in case of specialty, because it is extremely sensitive, the approval process is slightly longer. It can take 1 year, it can take even 2 years. Okay, so you need to put up the capacity fast and start taking different trials and make sure things are approved. So it is typically a bit more put up the capacity fast and then realizing the sales. And there will be possibly a gap of 1 year kind of thing. So current target, wherever we are, to reach that level of say 55 to 60,000, I think in next couple of years time, roughly, will be there. That's our feeling. 2 to 3 years we should be there. And since we know that in next 2 to 3 years time will be there, it is also important to start working on the new capacity, and there we are putting the capacity in Mundra So it should take roughly about 1.5 years to complete. So by the time we exhaust the capacity, current capacity will be ready with another capacity of another 40%. So I hope it is clear.
Yeah, that is quite helpful. Thanks a lot. I'll join back the queue.
Thank you.
Thank you. The next question is on the line of Abhijit Bora from Sharekhan. Please go ahead.
Can you guide upon the utilization of QIP money? Can I presume it to be for the expansion only?
Well, it is for this expansion, Greenfield, Chennai. I think we explained this during the course of our interaction with all the interest parties before QIP. And
Okay.
That's how it is. You are absolutely right.
Okay. And secondly, can you guide on the 22 and 23 volume and margins? Because it is a cyclical business, so if you can guide upon that part.
Look, I would not like to give a specific guidance on the numbers, but at the same time, we don't feel that it's cyclical business in that sense. Yes, depending on the situation, business situation, global economic situation, which has become little uncertain because of COVID, etc. There are of course challenges, but I refuse to believe it is a cyclical business. It is a pretty steady business to my mind, and the entire globe is a market. And as we can see, God forbid there is no major comeback of this pandemic or any other disruption happen. As we can clearly see, there is a good amount of growth both in automotive side, tire side, as well as the performance chemicals and specialty business side. We can typically tire is likely to grow about 6-7% on CAGR basis, and on the performance and specialty side, it is likely to be about 8%. India is a growing economy, so opportunity in India will be even more possibly.
So if I understood it right, 6 to 7% on the commodity volume growth and 7 to 8% on specialty side, right?
Yeah, you have understood correctly, but it is talking about not PCBL. I'm talking about industry. I'm talking about industry growth of tire industry growth of 6 to 7%. And for specialty and performance related growth likely to be in the range of 6 to 28% kind. Our growth may be even more than that, or depending on the situation, availability of volume, it depends on that.
Yeah. Okay. Thank you, sir.
Thank you.
I think one more thing I just wanted to add to the previous question, that other than this general growth, China as a country, which is a large manufacturer for last life, including carbon black, they're going through a very difficult time.
Excuse me, sir, but your voice is breaking up, so we are not able to hear you clearly.
Okay, what do we do now?
I am so sorry, sir. We are not able to hear you.
Hold on.
Listen, can you reconnect?
Sure, I'll do that. Thank you. Ladies and gentlemen, we are reconnecting the management. We request you to stay connected. Thank you. and gentlemen, thank you for patiently holding. We now have the line for the management reconnected. Over to you, sir.
Hello, can you hear us now?
Thank you. Ladies and gentlemen, we now have the line for the management reconnected. Over to you, sir. So please proceed.
Is the next question, please?
Yeah, we have the next question from the line of Sanjay Jain. Please go ahead.
Good afternoon, and thanks for taking my question.
Good
A couple of them. Good afternoon, sir. First, on the coal prices and the impact of it on the carbon black oil, and we use high sulfur oil. So to that extent, we have a dual benefit of the coal. One, obviously, the China manufacturing cost going up, which benefits all the operators. The second one is the power cost going up because coal is going up. So we produce a lot of power, even that get benefited. Can you just help us explain how the things will shape up in second half when we will see these coal prices impacting the competition and we are able to produce more power to sell it? Can you just throw some light? Because quarter on quarter, this quarter at least gross profit per kg has been stable. How should we look at going into the second half?
Very valid point you raised, and in fact, I also wanted to talk about China. China, other than this coal-based oil, which just talked about carbon black oil, which we call it CBO, it has gone up over a period of time because it is a byproduct of steel industry, and steel industry has gone through a difficult time in terms of crackdown from government on account of pollution. So that is one thing. Second thing, technologically, they have moved from earlier technology of blast furnace technology to arc furnace technology, where production of oil has also gone down. The availability of CBO in China, which is the raw material for carbon black, has gone down substantially over a period of last couple of years. So that is one advantage for us, definitely. It is a bonus in a way, you can say. And additionally, in recent times, this power outage which has happened in China has further impacted the manufacturing facility over there. So while China remain a very strong and big force in carbon black, but I think it has weakened their position to some extent. It is advantage to all other companies across the globe. That is one point. And second, I think as an organization also, we have improved a lot in terms of our own efficiency, production capability, and the reach and the geographical reach. So both combined, it is helping the organization. So that's how we look at it. And talking specific about how is it looking like going forward, I will not really give you any guidance on the numbers per se, but definitely things are looking pretty bright and positive. I just mentioned a while back that there is a good growth we are seeing in case of tires, 6 to 8%. And I'm talking about industry growth, not PCBL growth per se. And also on the specialty and performance chemical side, which is almost 30% plus portfolio for us today, we are seeing a growth of 7-8%. So combination of these things and other initiatives what we are continuously taking in terms of growing business and specialty further, where profitability is supposed to be better, we are looking at good quarters going ahead. Would you like to add something? So I hope I'm able to satisfy you.
Yeah, to an extent, but is it a structural play? Are we looking at? Have we seen incremental capacity in China coming from non-CBO route? Is that happening, or they are still predominantly dependent on CBO?
As on today, they are still predominantly dependent on CBO. Of course, there is some pressure on the other raw material which is available, especially from the big companies, big carbon black companies from China, and there is definitely a little bit of push on that. So that we are seeing clearly. So there's a bit of a structural change in that, but there is a good amount of benefit from the point of view of CBO versus CBFS when you look at. And another, the big challenge is even if they want to switch to the other raw material which we normally use, the equipments are not designed to handle that. The equipments will have to go through a major design change. I mean, it is completely In some cases, it's a complete change which they have to go for. So it is not that easy also to move from one raw material to another raw material so quickly. It is a major design change, major engineering process involved in that. So that's what the reality is. But as I said, having said that, of course, there will be some interest from China to buy the other kind of oil, not the CBO, but the CBFS.
Correct. That's fair. And this on the export side, can you explain us how the contracts for India are for us? Because even the realization, if I look at per kg quarter on quarter, it hasn't really changed. Is there a long-term contract we sign and there is a lead-lag effect in terms of how the domestic pricing are done? And on the export side, what are we building? Are we building a long-term relationship now that there is a China plus one strategy being adopted by most of the Western players? Are we seeing that driving a much longer-term relationship with a global customer for us? And this also added to the fact that the Western players are not adding capacity on a carbon black.
You are absolutely right. I think, largely manufacturing has not only carbon black, but many manufacturing has actually shifted from Europe and US towards Asia. And of course, within Asia, it was led by China. And now the China plus one strategy definitely is likely to help India. And now talking about Phillips carbon black in this backdrop, as you said that whether do you have any kind of long-term understanding? Yes, we do have long-term understanding with most of our customers, and we have a formula pricing mechanism where the raw material price going up or down, it automatically passes through to our customers. And that takes care of the major part of the business. We also do supply to, other than the organized sector, comparatively the smaller players, where it may not be a long term, it can be a month-to-month basis or a quarter-to-quarter basis understanding. And where also it is normally a little easier to pass on the price increase if it happens, or cost increase if it happens. So that is on the side of India. When we talk about long-term relationship with the international customers, I think in my opening remarks, I made a comment that earlier PCBL was more focused on the national market. We are predominantly a domestic market basis player. So we used to sell in India, and then whatever extra quantity we used to have, we used to sell it in the international market. It was more of a surplus management rather than an international strategy-based marketing, sales and marketing or business growth, which we changed over a period of time. We started building our relationship with our customers. Today we have a relationship with all the big companies of the globe in tire, whether it is Bridgestone or Goodyear or Continental or Michelin. And we have set up our own, not own, but as I mentioned, in collaboration with our supply chain partners, we have set up supply chain resources everywhere across the globe, in Asia, in Europe, and we are in the process of, we have already set up also in USA, and we want to expand it further, giving a feel of virtual plant to our customers where we are maintaining our stock, decanting facilities there over there so that customers doesn't face any problem. Additionally, we have our own people, our own employees who are local nationals. So we have a person in Japan who is Japanese origin. We have a person in Korea who is Korean origin. So similarly, we have in China, we have in Vietnam, we have in Korea, we have in Europe, in Belgium, in Germany, like that. And we are expanding in this area steadily. The footprint we are expanding steadily. So global market is now a strategic market for us. It is not anymore a surplus management, but it is a strategic market for us. And when you look at aggressive growth, so naturally we can't restrict ourselves to Indian market alone. Of course, we will not undermine Indian market at any point of time. This is our home market. We are the leader of the market at this point of time, and we will maintain the same position going forward also. But additionally, we want to become a dominant player in some of the countries across the globe, some of the regions across the globe. So that is the strategy, that is the philosophy for us.
Fair enough, sir. One probably a clarification on the long-term contract or a price formula-based pricing. Now the problem here is that the competition has a different raw material, different benchmark. We have a different raw material, different benchmark. Now, how does this really work in terms of formula-based pricing?
See, as far as India is concerned, and if you talk about the tire companies, they don't have any long-term understanding with any any source from outside India, whether it is China or Korea or anybody. Nothing. It is purely spot. So, whenever it suits for the sellers, they come and sell it here, and whenever it suits for the buyer, they just buy it from outside. There is no understanding on long-term basis with any external supplier today with Indian customers, to my knowledge.
So how does this formula work in that case for us? Because we are a single raw material based manufacturer. Whereas assuming that the coal, or historically if we go, we have seen really shrinking of that margin. Are we suggesting that these margins are steady state and it won't be volatile like it was few years back for us? Have we changed the complete business model to make it more sustainable rather than playing speculation?
Absolutely. We do not believe in speculation at all. Our buying is in sync with the selling. So, based on the projected sale, on forward sale, say in the beginning of this quarter, the projection is given for, say, October, November, December by the sales team. And based on that, the raw material guys buy raw material. And it is aligned with the sale. So we do not buy anything extra. We do not buy anything less. So it is kept in line with the need of the sale. And it is kept in line with the need where we can pass on the increase or decrease either way to our customers. So we don't do any speculation at all that, okay, crude price is low today to buy more. Who knows, crude may go down further or it can be vice versa. We do not get into any kind of speculation. It is purely based on self-focused and alignment with that. So that model is completely changed. That is number one. Number two, I am not even saying that the profitability will be steady state. I am saying going forward it should improve further because of two, three reasons. As an organization, we are continuously focusing on improvement in the area of efficiency across all functions. Okay, especially in the area of manufacturing, where there is an opportunity to improve on productivity and yield even today. To some extent, we feel we have done a lot of improvement, but still there is some way to go. So that is one area, efficiency improvement. The other area is that with our customers, we are also going up the value chain in terms of product. We are developing product through the R&D initiative in collaboration with our customers, where the margins are more. And parallelly, we are discarding the lower end of the products where the margins are less. So the product portfolio is becoming richer with the customer. The combination of these two things, one is the efficiency drive, and on the other side, the product portfolio is becoming richer by the day. So combination of these two reasons should be seeing that we are performing going forward is better than what we are doing today. I mean, okay, unless there is something very unfortunate happens like, say, COVID or some extreme disruption, maybe a political one or war breaks out across the globe, that is a different thing. But other than those kind of exceptions, we do expect going forward things will improve only from here on.
So there is no benefit in the gross profit per kg. This is the minimum we will do, and as the mix improves, it will only improve from these levels. That will be a fair assumption, right?
Yeah, I think, yeah, absolutely. What you were saying is right. Mix will improve and efficiency also will improve. So combination of both will lead to improvement on the structure. This is a structural change, so structurally improvement will be there in the profitability.
Fair enough, sir. Fair enough. That was quite clear, and thanks for giving the opportunity, and best of luck for coming quarters.
Yeah. So there's a structural change actually.
Yeah.
Thank you. The next question is from the line of Sayali Raut from Amara Capital. Please go ahead.
Hello.
Yeah.
Congratulations on a great set of numbers, sir.
Thank you so much.
I just want to understand the sales volume. So what are the carbon black sales and the specialty carbon? Can you please just give a numbers on a volume front?
Are you talking about last quarter or
Current quarter?
YTD? Just one second. I'm requesting my CFO to share the numbers with you. Just a second.
Yeah. Our tire volumes for the quarter were roughly 77,000 tons. Performance chemicals around 30,000 tons. And specialty chemicals 8,000 tons.
Okay. And can you please share the exports and the...
Yeah. During the quarter, Exports were roughly 34,000 tons.
34,000 tons.
Yeah.
Okay. Okay. Thank you. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Riken Gopani from Capri Global. Please go ahead.
Thank you for giving the opportunity. Congrats for a great set of numbers. Sir, I wanted to first understand a follow-up to the question earlier asked about the long-term contracts versus the more real-time pricing. So here the pricing is changed how often, and is there a sort of quarterly pass-through of whatever is the raw material cost, or what is the time frame over which the price changes would occur for us so that we take care of any raw material cost increases?
Yeah. Most cases, in most of our cases where we have formula understanding, it is normally 1 quarter lag. That means the previous quarter's impact, the delta is passed on in the next quarter.
Okay.
So typically 1 quarter lag, typically. Either plus or minus, both sides.
Got it. So we have seen the inflationary trend across the raw materials. Despite that, we haven't really seen any negative impact on the gross profit per ton. In fact, it has only improved. So if you could share, what is driving this improvement, and whether there is some residual price change which is yet to be achieved given the lag which we just explained, which could further support the same. If you could help us understand the current trends.
Well, this crude oil prices, which is a primary mother item for us from raw material point of view, started going up very sharp, I think, end of September. Somewhere around 24th, 25th, around that time it started climbing very, very, very fast. So the entire impact has actually not come in this quarter. The result what you have seen of last quarter has not come. Further impact will actually come in this current quarter, which is October to December. But most of it again will be passed through to our customer. This will get passed through our customer over a period of 2 quarters, which is this quarter and the next quarter, because the change was very, very sudden. So it will get spread over these 2 quarters. As per the formula, it will get spread over the 2 quarters. We'll be seeing some impact, possibly a little bit here and there. But at the same time, we were able to hold on to the margin by virtue of the fact what I already mentioned, by improving our efficiency continuously, working on the cost structure, reducing the cost structure, and then thirdly, working on the product portfolio, making it richer. With each passing day, we are trying to make it richer. So combination of these 3 things. On the one side, we are focusing on the cost wherever, other than raw material, wherever we can tone down our cost, we are working on that. That is one. Richer product set, that is number 2. And third, continuous focus on the efficiency improvement. So with these 3, I think we'll be able to sell through comfortably. Some ups and downs will be there always, depending on the change in the raw material, and especially if it is very sharp either way. But I think broadly it is quite manageable.
Understood. And sir, just one last question on the balance sheet front. So we have seen, compared to the fourth quarter, there being increase in the receivables from 700 to 935. So if you could just help us understand, is it just a seasonal trend, or has there been any delays in terms of, or is it the mix change in favor of exports that you're focusing on, which is driving the receivables?
Right. I think I'll request my CFO to respond to this. He will give you better clarity. Just a second.
Mr. Gopani, the increase in receivable number is mainly on account of increased raw material costs, because we have a pass-through understanding with our customers, so that also reflects in our realization. And therefore the increase, but in terms of number of days of receivables, it remains more or less where we were on last balance sheet day. So operating cycle-wise, it has not changed, but it is only a reflection of higher realization.
Understood. Okay. Thank you. Thank you so much for the answers.
Thank you.
Thank you. The next question is from the line of Bharat Seth from Quest Investment. Please go ahead.
Hi, sir. Thanks for the opportunity and congratulations, you and Mr. Raj. Excellent numbers.
Thank you so much. Thank you so much. Thank
Sir,
you. Thank you.
taking to our
Thanks,
R&D,
Yeah.
what you said in your initial remark, particularly on this electric vehicle, I mean battery side, the R&D effort, and second is the oil engineering. So where we are in this stage, and when we will see the benefit of that will accrue to our company?
Okay, I think you have been seeing the benefit getting accrued to our company during last few years already, right? And if you go back to the numbers, you will see there is steady improvement happening during last few years. And this is all because of all these initiatives what we have taken in the area of R&D, in the area of geography, customer centricity we have improved substantially, and also efficiency improvement in different areas.
Okay.
Now, talking about specialty chemical, which you just now talked about, and that is primarily driven by R&D because it is highly driven by R&D. And as I said, 40 plus scientists and engineers are working today between the two R&Ds in Belgium and India. And, in specialty, it is like a pyramid. So the pyramid has got plastics, okay, one layer. Then you have got pens. Then you have got inks and coatings. Then you have got conductive. And then you have got superconductive.
Correct.
The high-end Tesla kind of vehicle, the EV vehicles, Tesla type, they use superconductive grades.
Okay.
Okay. And there are only one or two suppliers today for superconductive. We have reached up to a level of conductive today.
Okay.
We are at zero. A few years back, we are at zero level. We covered plastic, then we covered paint, we covered ink, we have covered coating. We are at conductive level now. Quite a few grades in conductive we have already developed, which is used in the lower end of electrical vehicles, the autos, and also some of the electrical appliances, electrical applications it is used. And in parallel, we have also started working on the superconductive. So it is more of a journey for us. And the benefit of the journey, I'm sure you are seeing over the last few years' time, where we were about a few years back and where we are today. I'm sure you have seen the difference. Even during COVID, we sailed through. There was not a single negative quarter for us, even during COVID, the hardest part of our journey so far. So that is how it is. And going forward, I'm confident that you will be seeing this reflection more and more in numbers.
Okay. So coming to this, our normal, carbon black, then we are seeing in this particular quarter and even a previous quarter, domestic side was, is degrowing QOQ, export is improving, and overall our still growth is lagging than what we are envisaging. So how do we see this? And once we reach, I believe that you said our carbon black capacity is 5,71,000 and roughly we can produce 5 lakh ton. So till next plant comes, so how do we plan to meet the growing demand?
I think this year we'll be coming closer to that 500,000 tons or 5 lakh tons what you talked about.
Correct.
And, so far, if you look at Indian tire industry, they are going through a difficult phase because of this COVID and the second wave which has happened. And that, of course, reflected on us. But as an organization, we decided, as a strategy, as part of the strategy, we decided that we should utilize our full capacity. And therefore, we increased our international footprint more and increased our export more. So that was a conscious call because the demand in India was lower. Automotive was not doing too well. Then on top of that, pandemic hit us so badly, particularly in the second wave. So deliberately, we shifted a little more quantity to the international market. But if tomorrow the demand comes back in India, which seems to be a possibility going forward, then definitely we'll serve our customers in India. And at the same time, we'll take care of our long-term international customers. So it's a combination. So this is a typical case of agility of the company. We did not sit quiet just saying that, okay, Indian market is not doing well, so we are going to reduce our production. We decided not to do that. So we continued full production, increased our export to make sure all the plants are running at full capacity. So it was because of the agility and dynamism of the organization we could manage to sell through. And going forward, again, you might see a little bit of change here and there depending on the domestic demand.
that's fair, sir. But my question is now in FY23, how do we plan to grow? See if we can produce around 5 lakh ton in this year, then FY23 growth is going to come from where?
See, this year we'll be going up to 500,000 tons. That is the target, or close to that. Maybe may not be 500, but close to that somewhere. And by end of next calendar year, which is 22 December 22, the new plant will be up and running, will be commissioned. The greenfield which we are working on right now, Chennai, so that will be up and running. So after the next financial year, so automatically there is 1,47,000 additional capacity available to us. So this current 600,000 tons will be going up by another 1,47,000 tons.
Okay. And sir,
yeah.
How do we see still how much room is available for us to improve this productivity and improve the gross margin?
Okay, I mean, don't want to give you a number, of course, at this point of time. But as I mentioned, these are all driven by a lot of R&D initiatives. Going up the value chain, going up the product portfolio, it requires a lot of R&D effort, and precisely that's what we are doing. And so far we are successful. We have covered already 4 segments within specialty, and also could manage to increase our footprint in performance chemicals. And as I said that, we are also looking at superconductive and higher end of conductive grades going forward. So margin, obviously, is much more. Margin is obviously better than the other specialty there. The absolute higher end of the specialty, that is superconductive. So while I'd like to have to give a number at this point of time, number guidance at this point of time, but we feel quite confident that we'll be improving further from here on in terms of margin.
Okay, thank you and all the best, sir.
Yeah, thank you so much. Thank you so much.
Thank you. The next question is from the line of Jason Soans from Ashika Stock Broking. Please go ahead.
Yeah, sir. Thanks for taking my question.
Yes, please.
So I just wanted to, you to elaborate on your efforts for basically your product mix improvement. As you mentioned that, you will try to, increase the mix of performance chemicals as well as specialty black. So just wanted to know what are your efforts towards it. If you could elaborate more on the same.
The entire thing what we are doing now is in that direction only. And as I mentioned that we started with our first R&D center in India about 4 years back, and then followed it up with second one in Belgium. And currently more than 40 scientists and engineers are working between technology and R&D. And primary objective is actually to go up the value chain, come out with newer grades. And as I mentioned, during last 3-4 years time, we have developed more than 30 specialty grades. And many of them are extremely successful today in the market. So we need to venture into the other areas, which is performance chemicals and specialty chemicals. But that cannot happen unless you have got enough R&D effort. And whatever we have done so far, putting up new resources, R&D centers into different countries, collaborating with different customers, collaborating with some of the leading universities, and then some of the other industrial R&D centers also have collaborated in Europe. Government of Belgium is supporting us, sponsoring, granting some of the granting funds for some of the initiatives what we have taken today. So these are the initiatives in nutshell to talk about R&D. The whole philosophy of the organization is towards going up the value chain, adding new portfolio, new product, and then in the process improve your profitability. That is the mantra of the organization today.
Sure, sir. And one related question to that would be, We just want to know who are your major competitors in specialty black, and if Phillips Carbon Black has any particular moat or any competitive barriers in manufacturing for specialty black?
Well, major competitors, I mean, these are all public information. There are three big players globally. One is the largest in specialty, I think, is Orion Chemicals today, which is a German company originally. And then you have Cabot Corporation, an American company, and Birla Carbon, Colombian Birla Carbon, which is Aditya Birla Group company. So these three, and we are the fourth largest in specialty today globally. While overall basis on the sales numbers, we are seventh largest, but in specialty, we are the fourth largest player in the globe today. So that's where we stand in the competition side. As far as the approval from all the players in specialty segment, we are today approved with almost all major players across the globe for specialty chemical supply to them, specialty black supply to them. So that is the reality. So we compete with all the names I just took in all those portfolios, in all those customers' case. So that is where we stand in terms of competition. Your second question is whether we have any issue in producing specialty in India. Have I understood it correctly?
No, sir. Actually, what I meant is, so since specialty black is a specialized product, so would just want to know if there is any competitive barriers for competition to enter, any particular barriers.
Of course, yes. Of course,
yeah.
Of course, yes. Very much. Because the entire thing is different. It is not just the carbon black which we supply to automotive industry. It is a complete different kind of application. The requirements are completely different. It's highly customized. The raw materials are different also. Manufacturing process, equipment designs are completely different. And at every step, you have to have that kind of innovation and skill. So it is a combination of skill. It is a combination of engineering. It is a combination of raw material and finally market and customers. So it is all these five things together. If you are successful, only the specialty business is successful. So it is high level of entry barrier, I will say. Not entry barrier, high level of entry barrier in this field. Yes. And nothing is readily available. You have to really grind it out to make things happen. And that is what we have also done ourselves.
Yes. So that's heartening to know. So that will increase the margins going ahead. Yes. It's
a difficult one. I must honestly acknowledge it's an extremely difficult one. The journey was extremely difficult for us. We started almost from zero and reached wherever we have reached today. All our competitors look at us with respect. We are approved to do with all leading specialty black users across the globe, whether it is in Europe or USA or India. And also, I must mention one more thing. I think we're the second one which is approved for FDA. US FDA has approved the second carbon black company in the globe for supply for food grade items, food grade containers. Those containers what is used for food applications, food containers. So we are the second carbon black company in the globe who has got this approval, US FDA approval.
Sure, sir. Okay. And so just one last question from my side. Just wanted to know, in comparison to your regular rubber black or carbon black business, how are the margins better in performance chemicals and specialty chemicals?
I'll request my CFO to talk about it. Just hold on.
Yeah. I'll just give you some figurative things.
Yeah.
So we make about roughly 20 to 25% more margins in performance segment. And the margin in specialty segment is about 2.5x currently. And it keeps changing. It's the base, margins in the tire segment that because of all the, R&D that we are doing in the product portfolio of tire. Even in that portfolio, we are moving up the value chain. We are adding grades and we are discarding grades. So margins even in the base segment is improving, right? But broadly, that's the structure.
Sure. So if I understood it correctly, it's 20 to 25% more margin in the performance chemical segment. And in terms of specialty chemicals, it's 2.5x of the regular carbon business. Yeah. Okay. Thanks.
Just one request to all of you. Please do not undermine tire segment. It is a big segment. It is a good segment, profitable segment. Even there also we are collaborating with all leading tire companies across the globe, including India. And we are going up there in terms of value chain also. And the profitability is decent. It may not be as good as specialty, but it is pretty decent. So you should look at a balanced portfolio where Tire blacks are important. At the same time, performance chemical as well as specialty chemicals are equally important. So please do not undermine that segment. With automobile growth, tire will also be growing, and I'm sure we'll be able to do well. We'll be able to make good money in that segment as well.
Sure, sir. So just as you mentioned that, what I understand is tires will always be your bread and butter business, and the other, performance chemicals specialty.
No. Hold on. No. At the same time, tire is not the bread and butter. Tire is important, but all three of them are equally important. So we don't want to depend on any particular segment. We are equally spread over these three segments today.
Sure. And sir, just as you mentioned, for tires business, you're also, discarding the lower margin business,
right,
and moving up the value chain. Could you elaborate more on this, as in how are you doing that, and in what segments? Because is this for higher grade tires, or what exactly? Yeah. Or higher strength tires, or
Right. In case of tire, what has happened over a period of time, over a period of last few years, the tire industry also has gone through a lot of improvements and developments in terms of the tire structure, in terms of mileage, in terms of fuel efficiency. Level of noise has come down over a period of time. So the engineering has also gone in bigger into tires. And naturally, critical raw materials, including ours, we play a major role in developing a new set of tire or a new design tire. So what typically happens, and also one more thing happened in India specifically, in passenger segment as well as in radial segment today, radialization has started happening in a big way. And as we speak, passenger segment is almost 100% radialized. And if I know correctly, I think truck tire segment is roughly about 40 or 50% radialized. Now, when you move from bias technology of tire to radial technology of tire, your raw material requirements are also a little bit different. Okay, and so is the case with carbon black. The requirement of the characteristic or specification or a particular performance area they look for in a particular carbon black grade is quite different from what it was in case of bias tire. So over a period of time, we are clearly seeing this shift when things are moving from bias to radial, and consequently the requirement of carbon black has also gone through a lot of changes. Though all of them are rubber-related carbon black, but there are different grades even within rubber black, and there are higher grades for the applications for high-end cars like say a BMW or Mercedes, and there are different application grades for say a Maruti or a Hyundai. So it's a combination of both basically. It's a combination of both.
Sure, sir. Thanks for answering all my questions.
Thank you so much. Most welcome.
Thank you. The next question is from the line of Surabhi Sarogi from SMIFS Capital Markets Limited. Please go ahead.
Hello. Am I audible?
Yes, you are, ma'am. Good afternoon.
Good afternoon, sir. Sir, my question is that looking at your
During the quarter, last 3-4 months, we have witnessed steep increase in crude prices, right? And in spot market, the realization get impacted. The change in recovery or realization is not immediate. And therefore, during the quarter, the gross margin in carbon black segment has gone down slightly. But good part is that we could generate more power roughly, and therefore we could sell more power also. So we have sold about 20 million units of power more during the quarter, and of course, and the realization in power segment has also been slightly better than the previous quarter. So it kind of added up for the lost profitability there.
Okay. Okay, sir. And sir, I have one more question is whether any price increase is expected in the next quarter to compensate for increase in input prices?
Yeah, like Mr. Roy was mentioning, we have a pricing formula arrangement with our large customers, organized sector customers. Roughly 70% of our volumes are under formula pricing arrangement. And there is a mechanism for recovery of change in cost, right? So that will happen.
Okay. Okay, sir. Thanks for the information. That's all from my side.
Thank you, ma'am. Most welcome.
Thank you. The next question is from the line of Romil Jain from Electrum. Please go ahead.
Hello.
Yes.
Thanks for the opportunity. You can hear it clearly?
Good afternoon. Yeah, most welcome.
Yeah, good. Yeah, sir, my question is, I think we've read some reports where, silica was also being used in comparison to carbon black. So I just wanted to understand some views on the benefits or, cost side, whether it can replace carbon black. Just some understanding on that would be great.
Well, silica is in existence for last, I think, more than 20 years now. And carbon black also is in existence for so many years now. Both raw materials have its own space. So I will not say that, silica will replace carbon black or vice versa that way. Properties are completely different. Carbon black has got certain set of properties which silica cannot achieve, and silica has got certain set of properties which possibly carbon black cannot achieve. So it has got its own space. Both have got their own space. And to my mind, both these industries can grow as we grow economically, as we grow industry-wise. I think you are talking about tire, particularly I'm talking about the tire.
On the tire side.
Right. On the tire front, as the tire business grows, tire industry grows, to my mind, both carbon black as well as silica, both will grow. So it is not that it is at the cost of one another. Not really. Both have got its own space. Both have got its own space. It is not one-to-one replaceable item at all, technically.
Okay. So we should not see any major threat as such in terms of...
No, not at all. Not at all. It has got its own space. Carbon black has got its own space. Silica has got its own space.
Okay. And I think also we are moving up the value chain continuously, so that should also kind of help us, in the base carbon black volumes.
Right.
Absolutely. Shift. Correct.
Absolutely. And as I said, silica is in existence for last more than 20 years. If it was one-to-one replaceable by now, carbon black business would have disappeared.
Correct. Right. So second question is, on the China aspect that you mentioned. So obviously, as you mentioned, it is more structural in nature. But are we seeing that China may not come back in terms of exporting to the global market, and we may gain market share on a permanent basis? Hence, the structural.
Typically, what has happened in case of China? They grew at a very breakneck speed, very, very fast. They grew in manufacturing in number of areas, including carbon black. And in the process, what happened in China, while it has got more than 40% of the global capacity, but if you look at the top 10 players, there are only, I think, 2 or 3 players maximum. So it is scattered across the whole country. Small players, there are many who are kind of unorganized. They do not follow the proper pollution norm, etc. Do not follow the best quality mechanism, best quality management, or the manufacturing excellence. And now Chinese government has started acting very tough on the smaller, particularly the smaller players who are not following not complying with the environment norms, etc. But the bigger ones are actually robust. But at the same time, by virtue of this fact that this government action has already happened and coal shortage has added fuel to the fire actually, possibly we will not see the entire capacity coming back.
So how much part of that capacity would have been compromised? How much percentage-wise is there any number?
There is no official report, but as we understand from various sources, roughly about almost 20 to 30% of capacity got impacted.
Okay, and that would be more permanent in nature?
Most of it possibly, because of combination of reasons, pollution-related issues, then consolidation of the industry is happening, Then government support used to be very, very huge for carbon black industry at one point of time, which government has now withdrawn. Plus this kind of a farm strategy, I think we talked about some time back. So combination of all these things, I think it is an opportunity for other players across the globe, especially in Asia, companies like us, because the manufacturing cost benefit is there with us compared to, say, Europe or USA. So it is an advantage Asia, advantage India, and advantage PCBL to my mind.
And sir, versus Asian countries, other Asian countries, we would be more or less competitive in similar range, or we would be much better?
We are, the big companies will be equally competitive as us. So there are big companies in, say, Korea or in Russia. So we are all equally competitive. It is always a focus on the efficiency. You have to continuously improve what you can do. And more focus has to be there on product portfolio, how you can make your product portfolio richer, how you can serve your customer in the best possible manner so that the stickiness with the customer is high and customer continues with you almost forever. It is a combination of these things. But there is always a space for, quite a few good, big global players. And we are definitely one of them and will become bigger with time.
Sure. Thanks a lot. Just clarification on the tax rate. I can see in the first half, I think somewhere around 20%. So what would be more sustainable going ahead?
Just a second. I'll give it to Mr. Raj Gupta to respond to this question.
Sure.
So as you know, currently the marginal tax rate for corporates in India is 25% roughly. Currently we are at 20%. Our Greenfield project is coming under a SPV, which will attract a lower tax rate around 17%. So going forward on a long-term perspective basis, we will be somewhere around 22-23%.
Okay. Got it. Thanks a lot. And all the best, sir.
Thank you. The next question is on the line of Anay Mittal from Invest Research. Please go ahead.
Thanks. Can you hear me?
Yes. Good afternoon.
Thanks. On the congratulations on the good set.
Thank you so much. Thank you so much.
Sir, I just want to take a step back and need to hear from you in terms of your vision, in terms of taking this PCBL as in terms of the mix of the products that you have, like the specialty chemicals and tire. So currently maybe 2/3 is coming from tire. So are you seeing that change in next 3-4 years? How it would change, sir, if it's going to change?
I'll not talk too much on percentage because we are growing in both areas, performance chemicals and specialty chemicals combination as well as in tire. So it cannot be fair to look at only percentage terms because both businesses are growing, both segments are going to grow. But today we are in the ratio of, as we mentioned correctly, about 65-35 between the two. So going forward, possibly we'll see more thrust in the area of specialty and performance chemicals. But at the same time, we are also adding capacity in the tire side because automotive, there is good opportunity. Indian market is likely to grow multifold in automotive area and therefore in tire areas. So why should we leave that opportunity? So I think it is the right way to look at is the absolute numbers. And there, if we look at specialty today, where we are, I think we discussed about it sometime back. At current run rate, we should be about, anywhere between 32,000 to 35,000 tons. And that we are looking at taking it to a level of maybe 55 to 60 within the next couple of years' time, which means we'll be utilizing the full capacity which is available to us today. And therefore, we are going ahead with the Mundra capacity now, which will be ready, say, in 18 months' time. And then the trial and other things will happen. We have always stay ahead of the time in terms of putting up capacity for specialty. So best way to look at it, how we are growing in specialty.
This conference is scheduled to be disconnected automatically in 9 minutes.
Hello, can you hear us?
Yes, sir. Please proceed.
Yeah. So you will be seeing that we will be growing at a good rate in specialty. And at the same time, we will not be neglecting the other one, which is relating to tire. So I'll answer it that way, actually, instead of giving you a percentage figure, which is not fair. We should look at absolute numbers, yeah.
Sure, sir. And again, in the same way, if you can drop your vision on how that export versus domestic will look like.
Right. Yeah. See, as I said a while back, earlier it was more about India as an organization. We are more a national company. Today we are not anymore. The color of the organization is changing. We have got multiple international offices, multiple operations, multiple customers across the globe. So I think going forward, we'll be looking at a more and more balanced portfolio, maybe, almost 50-50 kind of thing. But I think as an Indian company, it is also our responsibility to ensure that all the Indian customers are taken care of, and we are the business leaders here. So that's a responsibility we have to fulfill as well. But the desire is to grow to 50-50 kind of level, to go to a 50-50 kind of level. And for that to happen, to be honest, we have to add a lot more capacity as we go along.
Got it, sir. Got it.
Yeah.
Thanks.
Yeah.
And sir, you already spoke about that expected growth, which is like industry is growing at 8%, and maybe PCBL might grow maybe a little beyond that, or maybe at the average. So, do you have any other views on that, sir?
No, I think you are right, but I think we need to look at segment-wise. Specialty definitely will be growing much faster than the growth of the industry, much faster. And that is logical because we are a comparatively smaller player in specialty, so we should not be too bothered about industry growth percent. We should bother about how fast we can grab market and grow with different customers. So specialty will be much more in terms of growth percentage. In case of normal tire industry side, yes, the growth is likely to be better than the industry. Can't give you exact number at what rate we will grow, but we'll definitely will be growing better than industry growth rate.
Okay, sir. Thanks. That's it from my side. Thanks.
Most welcome. Thank you so much.
Thank you. The next question is from the line of Madhav Marda from FIL. Please go ahead.
Yeah, sir. Good evening. I had a very small question actually.
Good evening. Yeah.
Actually, just today or yesterday, you all decided to change the name of the company from Phillips Carbon to PCBL. What I've at least noticed is when companies change their names, it usually signifies a change in the DNA or the kind of maybe the kind of product portfolio or something like that. Companies undergo that change structurally. So is there some thought process behind why we are changing that name? Is that signifying?
Yes, of course, there is a thought process, and we are very clear about it. Carbon black is part of chemical industry, but somewhere we felt, and today, as I mentioned, as I talked about, three different segments. One is automotive segment, and then one is performance chemical segment, and one is specialty chemical segment. So you can clearly see 35% or 30% plus of our business is actually not pure play carbon black. It is more about other chemical application, right? So when it is Phillips Carbon Black, the connotation says possibly it is carbon black company, whereas it is much wider for us, to be honest. So and the DNA has already changed. We have started focusing on R&D, going across the globe, working with different customers in specialty, performance, as well as, of course, automotive and tire. So that was not getting captured. And that was one of the reasons we said instead of Phillips Carbon Black Limited, let us look at PCBL. Now, why PCBL? It could have been something else also. The reason is globally, in short, in abbreviated form, we are known as PCBL. A lot of our customers identify us as PCBL. Then we thought, why not to then use that as our name itself? Instead of any other name, we zeroed it on PCBL therefore. So that is the genesis of the whole thing. One is to give the flavor that we are a chemical company, which is a fact. And the second is to maintain that PCBL thing because customers do identify as PCBL. It's a brand for us today. It is actually a brand for us today.
Understood.
And it is pretty strong. So that is the reason actually. You're right.
Yes. All right, sir. Thank you so much and all the best.
Most welcome.
Thank you. Ladies and gentlemen, we'll be taking the last question. That is from the line of Chintan Chheda from Quest Investment Advisors Private Limited. Please go ahead.
Thanks for the opportunity. Good evening, sir.
Most welcome. Good afternoon. Good evening.
Yeah. Sir, my question is regarding the segmental EBIT margins for the carbon black division. So despite having reported the highest ever volumes for specialty carbon black, sequentially there has been some decline in the profit for the carbon black division. So your comments on that?
I'll request my CFO to reflect on that. Just a second, please.
Roughly, 30% of our volumes come from sales in international market, and you must be aware freight prices are going up every month. Now, our contracts in international market, those are based on some fixed recovery of freight costs, and therefore the incremental freight that we bear on some of these contracts is actually denting the margin. So, as such, from gross margin perspective, there is no impact, but when we consider the sales, selling cost, then actually it is impacting us. But then every year we sign contracts, around this time for the subsequent year, and this calendar year is just about to be over. So from that next quarter, January quarter onward, we will again enter into new contracts when we will sign with the new freight rates. So it is temporary.
Okay. Sir, but even if I look at our other expenses, so there also there is some sequentially, this is down by around 11 crores this time.
This quarter is down, but actually the freight cost has gone up, while some of the other expenses like maintenance costs, etc., that has come up. Actually, during COVID period, we deferred some of our maintenance activities, to control costs. And those activities were carried out largely in quarter one, and therefore, in that quarter, the other expenses appear to be a little high.
And how much would be that?
That will be around 25-30 crore.
Okay. And so one last question. So our other unallocable expenditure, there also from 59 crores in Q1, we are today at around 32 crores. So this is again related to that recurring nature?
It is largely because of that. It is largely because of those because plant and machinery repairs and repair and maintenance expenses, some of these, the equipments are common and therefore unallocable. So in the two segments.
Thanks a lot, sir.
Yeah.
Thank you. Ladies and gentlemen, that is the last question on behalf of ICICI Securities Limited. That concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you all. Thank you.